Welcome back to Financial Freedom Hub. Today's topic is gross profit. Gross profit is the money a company makes from selling its products or services, minus the cost of making those products or providing those services. To put it simply, it's the money left over after paying for the things they sell. To make it easier to compare companies, we use gross profit margin, which is just a percentage of gross profit compared to revenue. To calculate it, we divide the gross profit by the revenue, the total money earned from sales, and multiply by 100. Now, when we're looking for good investments, we want to find companies that consistently have a gross profit margin higher than the industry average. It's like a sign that the company is doing well and making more money compared to their costs. If a company has a gross profit margin of 40% or more and has been consistent for at least the past 10 years, that's a positive sign. Having a solid gross profit margin shows that the company operates in an industry where they can make money over time, sell their products at higher prices and keep the production costs low. It means the longer you stay invested in that company, the more chances you have to see your investment grow and potentially make you rich. On the other hand, low gross profit margins tell us that the company is in a highly competitive business. They might have to lower their prices because of tough competition, or they are unable to raise their products' prices if their suppliers raise theirs. Such an investment can never make you rich and financially free. Of course, there can be exceptions. Sometimes, a company with a lower gross profit margin might still be a good investment if they have other strong qualities or are in a growth phase. Now, let's see how this can apply to personal finance. Imagine you want to start a small business or do some freelance work on the side. You can use the same concept. Keep track of how much money you make from your work, revenue, and subtract the costs of materials or services you use to do that work, cost of goods sold. This will give you your gross profit. If you like, you could calculate your profit margin even against your salary. Just deduct costs that are directly related to doing your day job, your cost of goods sold, and divide by your net salary, your revenue. Just like in investing, aim to have a good gross profit margin. It means you're managing your costs well and making more money from your work. This can lead to better financial stability and potentially more wealth over time. In summary, gross profit is the money a company makes from sales minus the costs of what they sell. Gross profit margin is a percentage that helps us compare companies. Look for companies with consistently high gross profit margins, preferably 40% or higher, as they tend to be good businesses and can make you growingly more money the longer you hold them. In our future videos, we will go through step by step all aspects of financial reports. In the end, you will be able to distinguish a good investment from bad one, better than some professional investment advisors. Please subscribe and stay tuned.